Hi guys, welcome back to another Thursday night with us. Any lawyer viewers who have been following us for the past few weeks, drop us a hi at the comments so that we know you are there. So I think it has been quite a great adventure ever since we started to talk about tech stock. I mean, this is the third episode ever since we talk about tech stock. If you guys remember, the first one was about an OSAT company called Inari, and then last week we talked about who was that? Franken. Yeah, so a company which is in charge of a semiconductor cleaning services. And this week's company is a little bit of a hybrid. They do hardware, but I think their key strength is actually in the backend software part of it. So I hope you guys enjoy it. If you know about this company, do share your so-called thoughts about this company. Revenue Group Bhd. Let us know in the comment section. What do you know about Revenue? What is the thing that you would think about when Revenue Group Bhd and people talk about it? What is the first thing that comes to your mind? Let us know. We will wait a bit for the crowd to come in, then we will talk about the company. Shall we start, Jumbing? Or should we still wait?
Yeah. I think we can start.
Okay, so cool. Okay, disclaimer as always, is just for sharing and educational purposes, not meant for any buy-sell decision. Yeah, that's about it. So let's go into today's company. So this company, Revenue, whenever it comes up on the news or if other stock gurus or educators talk about it, the white machine is always the default thing that people always link to mind. Do you think about other things else, Jumbing, when we talk about Revenue Group Bhd?
No, I think this is really iconic. People start to notice them when they are really, I would say, everywhere. If you go to different places, besides GHL, I think they are the one dominating the markets, and they managed to dominate the market in quite a fast pace, I would say. And then I think now, of course, it got hold back a little bit because of the pandemic, or else I think they will be doing quite well in terms of recruitments.
Yeah. So yeah, whenever people talk about Revenue Group Bhd, it's always about this white terminal machine. And previously, I never looked into them that deeper, but after I look into them, actually, it's more than just that white EDC machine. It's what they do behind that counts. But before we go into what Revenue Group Bhd does, it's actually quite important to know the card payment cycle. What happens every time when you try to buy something using credit card? So imagine yourself, this is a picture that I find quite interesting and straightforward. I got it from mastercard.com. So every time if you were to go somewhere, let's say you go shopping at a place, let's say you go to Pardini okay, let's say Pardini, and you choose the clothes that you want to buy and then you pay by credit card. So you are the customer there and the merchant is Pardini. So let's say, example, if Pardini accepts credit card, the moment when you tap your card on the EDC machine, which is the card reader that reads any credit card information, straight away you go to step 2, which is if Pardini actually allows credit card, they have to work with a bank, with a merchant bank. So there you have your acquirer bank. And then the information will then get transferred through the bank and then bounce to either MasterCard or Visa, depending what card you're using. And then it goes to your bank, which your credit card is issued by your bank. Let's say you're using public bank's credit card. So you also prompt to public bank, hey, does this guy have enough money in his credit card balance to pay for what he want to buy? If yes, then it goes back to merchant terminal. Okay, transaction approved, then consider you pay you pay Pardini, and then you get what you want to buy at home. So the moment when you tap and then it goes through a route system, payment pass, no undue balances. From step 1, 2, 3, 4, 5 is a few milliseconds, and this is what's great now about card payment. And what Revenue Berhad does is that it controls, or is more in charge in the step of part 1 and part 2. The moment when you scan your card, if it's a Revenue Group Berhad EDC, that's where they start to earn money, because they provide the card reader to merchants. And if they also provide the card readers to the merchants, they will also be the backend service provider to actually process this so-called payment, and then only they will remit it to the merchant's bank. And then during that, for doing this kind of remittance or payment kind of services, they will charge a portion of it on top there. So Chun Bing, anything you want to add on? So yeah, so basically that's what Revenue Berhad does lah. They provide it, and you see here actually they have 3 business verticals. So the one most famous, of course, is the EDC terminals. Basically, they sell the white machines or white card reader, or they rent it to the merchants. And then every time we tap our credit card onto a Revenue Group Berhad EDC, the payment transaction processing will also gets done by Revenue's so-called platform, which is called RevPay. And then they also have another third vertical, which is more towards the solutions and services. Basically, they have softwares that can help to make the payment numbers crunching process easier and faster and more efficient. Chun Bing, anything you want to add?
I think it's quite straightforward. I mean, if you guys are into all these e-wallets, Visa, all those things, you definitely notice or engage with this white machine before. Basically, what makes this special, I think they are one of the first few guys to offer the terminals, wireless terminals, and then also allow them to accept multiple payment methods. So last time, the traditional one with wire, then you need to put in the PIN, they are Visa and MasterCards. And then they managed to catch the wave of e-wallets, all those things, and then this one terminal can just tap out everything. They can process all the different e-wallets, and then this is how a lot of SME, a lot of small retails, or even big retail chains that have a lot of branches also use them, because they are just convenient, wireless, and then can accept multiple payment methods.
Yep. So of course, this is a more detailed breakdown on the 3 sub verticals on what each vertical do. So very briefly, we go through of course, the first one, which is the most present physically, is the EDC terminal. They earn a revenue by either selling the EDC or renting them. So as a small business owner, you can either straight away buy the machine and then you own the machine, or if you think that buying the machine is not is maybe expensive or whatsoever, you just pay a rent. You rent the machine from Revenue Berhad, then every month you pay a rental, and you choose to use Revenue Group Berhad's EDC. So that is the most straightforward, because that one, basically, as a consumer and retail investor, when we were to go shopping or whatsoever, if we pay money to them, you just be a little bit more observant, and you will know that which are the so-called companies or merchants that are using Revenue's EDC. But the one that is really the business vertical that can actually scale further and further is the so-called solutions and also the electronic transaction processing. So what, as I said just now, the other part of Revenue's so-called revenue is also when you scan the card, and then the card, you encrypt data, encrypt data go to the issuer's bank, and then to MasterCard or Visa's database, and then only pass it to your credit card company bank. So all these kind of checking, all this kind of data encryption, they help to process it. And for every transaction they process, they will take a fee from it. So they call it the so-called third-party payment processing, or the merchant discount rate. So when you use Revenue's transaction process, they also will take a portion of it from the item that the merchant sells. So that one is very scalable because every time you scan a card, every time they process, then they will earn something. Whereas for EDC's sales, the moment they sell to whole Malaysia, that's it, no? They cannot sell any more EDC terminals. And the third one also is the another part that can continue to stack and continue to grow is the solutions and services. So basically, in this segment, what it does is that what revenue will do, they will sell and develop licensing software. So they will just create a software that can help to ease SMEs so-called payment kind of solutions, and then they can also make it as a subscription. So the moment people like their program, people continue to use their program, use their solutions, then every year they can renew the subscription, and this also contribute to a more recurring and stackable revenue for revenues growth potential. So this is, I think this for this slide is, I think, one of the older quarterly report. But if you look at the new quarterly report, they have extended their solutions and services. Yeah, you see, they also went into mobile credit card top-ups, and then they went into all kinds of other smaller transaction and then they see they are also into procurement and logistics services rendered to customers. So they are slowly, if you read how the founder actually thought of pivoting his company, he also know that selling EDC and renting EDC will hit a ceiling one day, and the company has to find other ways to make more money and create more business channel. Later, we also will go more detail to see what are the other things that the founder actually embark and actually try to actually make revenue completely different from its competitor. So it's very focusing on the part where they can scale faster and grow faster.
Yeah, I think one thing to share about is oftenly people talk about MDR, merchant discount rates, when they analyze different payments players. I think one of the things that you should take note is actually, of course, the bulk of it go to the bank or go to Visa or MasterCard. The one that providing this kind of service, usually their cut is not that huge. So that's why a lot of people at the first glance, yeah, maybe revenue seems to be acquiring a lot of merchants in a very fast pace, but then maybe it's just penny to a lot of people because the margin is too low unless you have massive volume. But you're not the only one. You got EJHL, you got IP88, but it's more into the online space. All these people are there. So how to make this special? And then when we jump into this, before we jump into this, we think, yeah, revenue is just like any other payment guys. Of course, they try to be smart. They are the master of every payment methods. And then they provide terminals rather than they spend a lot of money like Touch and Go e-wallet to get the user and then spend within their networks. Different play. But then we are glad that we found out there are few interesting moves taken by the founders. Later, once we share, you guys will understand how they wanted to go out from this zone, because this zone they will hit ceiling quite easily after they acquire, let's say, a big sum of the merchants in Malaysia.
So yeah, why we think that revenue's key strength is not just by selling EDC, it's actually RevPay. So RevPay is their integrated platform where they can simultaneously, or they can just somehow make different wallets and different payment systems talk to each other. And then, when it comes to online payment kind of things, a lot of service providers are offering it. And sometimes you need very, very good kind of network and also software to ensure that money, let's say from your Touch and Go e-wallet, transfer to blah, 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 another party. The numbers have to jive, or else shit will happen, because at the end of the day, once our money slowly goes digitalized, we won't go to the bank personally and withdraw all our money and count that it's actually there. We actually trust the number when we log in our account and say that, okay, this is the amount of money I have, then it shouldn't be anything more or anything less. So your back-end software system has to be very, very chunky and very, very competitive to be compatible and also able to serve such a wide spectrum of clients. So you have Touch and Go, 支付宝 from Alipay, Big Pay, WeChat Pay, Boost is also there. So you also have your credit card service providers like Visa, MasterCard, MyDebit, and also Nets from Singapore. So, and they are also in the online space as well. And they are also doing QR code like GrabPay. So when you look at how GrabPay actually positions itself, it's actually more of the back-end technical kind of a service offerer. And you often think that a company like Grab, which tech company, managed to make car ride-hailing such convenient now. Previously, we always had to rely on typical traditional taxi, but now with an app in your hand and with internet, you can launch your Grab, and then you can just call transport at anywhere you want. And when Grab decided to go into GrabPay payment kind of mode, they also work out with or collaborated with Revenue, because Revenue is the company that actually has the so-called technical know-how background and the software to ensure that GrabPay can continue to grow within the e-wallet space in Malaysia. Jumping, anything you want to top up?
I think Revenue has been always quick when we talk about the payment related players. So if you has been following this company, you will see the latest press release or latest news about them is they are including Shopee Pay into the terminals. So while Shopee Pay started to go into this payment route, instead of you pay within Shopee's, earn the coins and whatnot, they start to offer it as wallets. Revenue is the first one to announce, yes, we have integrated, you'll be able to collect Shopee Pay. If you are within the white machines, you have the white machine, you can collect it straight away. So this has been encouraging. If you wanted to go into this space, become the mother of all the payment methods, Revenue has been quite, has been the leaders. I would say they are very quick, very fast, and very sensitive to the markets.
Yeah, and of course, after we roughly know what Revenue does, then we zoom in into how they earn money and which vertical actually is the most profitable. As you can see here, and this is the so-called one of the annual report where I think I have to really compliment Revenue on showing their data. Maybe their business is really good. Everything is really in the annual report. I don't need to dig. I just need to screenshot and then just tell you guys now. You can actually find this kind of information exactly from the annual report. They are not scared of hiding something. So you can see here, they also just briefly split their businesses into blue, green, yellow, and purple. So the blue one is actually the amount of EDC that they sell. So you can see it's going higher and higher because more and more people are actually opting to use Revenues per heart EDC, because one value chain kind of service. You not only buy the EDC from them, and then they will help you to do all the processings every time your customer scan a card. So it's solving two issues. First, you enable your customer to use credit card, and secondly, their service is reliable. They process payment very well, and then you collect your money on time. And then the next green color one is also they separate it out. This is the green color one is the terminal which they rent out. So some of the merchants, they opt not to buy and then they prefer to rent. But you can see that over the years, ever since 2015 until 2019, it has been going on the rise. So there are also merchants out there who opt to rent and don't want to buy. And if they get more and more merchants opting to rent their EDC, then of course the green color rental machine contribution will also rise. Then next, when you see how the sales of the machine is very fantastic, it's on the growth trend, and then the rental is also on the growth trend. You see the yellow one. The yellow one is the recurring one. Every time people tap their card, they process, they earn money. So the yellow one is the increase, and it's more drastic than the sales and the rental increase. If you look at just 2015, it was lower than the rental contribution. But comes to 2019, it overshoot, and I think give you another few years, it will definitely overshoot the ETC sales portion as well. And of course, the other small segment that they are also trying very hard to pivot and also grow is the solutions and the services. Basically, now you can also do your mobile top up if you are on prepaid using a revenue RevPay kind of supported platform. And overall, everything is combined together. This company is a growth company, even though they just IPO in 2017 or 2018. People have talked a lot about it, and then a lot of so-called value investing, tech investing kind of educators online are also raving about this company, and you can see why it is. So yeah, we can move on to the profit part of it, and this is where you see where the real money is. Just now we see that the blue and the green part is showing massive growth, but the profit margin more or less there. Of course, it's still growing, but it's not as crazy as the solutions part. Because when you process a payment, you basically need to have very strong backend, very strong software, and very strong processing capabilities. Once the system is set up, you just need to ensure that it has the capability to process more and more payments as your company slowly grows and as more and more people tap and swap their cards on the revenue EDC. And this is where you see the gross profit for the service and the payment processing part actually balloon. It already surpassed the gross profit margin for the sales and the rental part, and it is the main contributor of revenue per heart's increasing gross profit margin. Chun Beng, anything you want to top up when you see this kind of graph?
No, I think from how they started the business and then how they managed to secure the business and then eventually growing the gross profit margin, I think is on the right track. Because selling the machine is just traditional brick and mortar kind of thing. You buy or you manufacture and sell, and then it's one off. So they park the MDR rate into part of it, and then they manage to get something else. And then from the experience they in the payment sectors, they go into the processing parts. So I think all this is on quite clear directions where they wanted to head to. Basically, all the number flying around, they want to be part of it, and they want to provide a solution to it. Moving from a very downstream, go to upstream. So I would say they are moving on the right directions. But then whether the recent acquisition actually echo what they wanted to do or not, I think this one is a debate point because it's always good to see people try to expand, but then from the acquisition you also can see what is the thing they are trying to do.
Yeah, exactly. So of course they have been very fantastic in terms of just I think 2 years or 3 years, I think 3 years of just IPO. But this company has been around for quite some time already lah. But they just IPO, and then you look at their few latest quarters results, they also can show you proudly that the electronic transaction processing and also the solutions, the margin is so much more superior than their EDC sales and rental kind of contribution. And as we all previously also talk about, the sales and the rental will definitely hit the ceiling, especially for the sales. Whenever you finish selling the whole Malaysia EDC terminals, there's no one else to sell for already. So the smart way is to actually leverage and improve on their transaction processing and also their solutions and services. Try to find more solutions and services where they can actually make a presence, and then eventually all of these can actually work together as an ecosystem. There are also, of course, countless of interviews with the founder. I mean, during this kind of interview, if you really watch it, they already have the end in mind. It's just now that they need time and so-called strategize their movement one by one to actually make revenue more complete ecosystem, payment kind of ecosystem company. So you can see here, straightforward, the gross profit margin for their transaction processing and solution services is top notch lah. Above 50%. That means every RM1 they earn, or the net kind of revenue, 71% is actually muscle pocket, and the 30% is basically for their so-called operating costs. So it's a very fantastic kind of margin you're looking at. Next, if you look at the income statement also, there's nothing to complain, and in fact, it is also one of the kind of examples of growth company that you want to see. Always growing in terms of revenue, and then gross profit is also growing also, because when you have a fixed kind of software and backend solutions, and what you need is just to increase your sales with the same amount of tech, same amount of expenses, you can actually do more and more and more, because your system is already put in place to process on, to take on something that is bigger than what you have invested into. Yeah, so very straightforward. The income statement is growing, revenue growing, profit, everything is growing, and that's why a lot of people perceive revenue as a company easy to understand. I would say less risk because of their current kind of strategy, and also their performance. It's been 2 years since the IPO. I mean, you want track record. The track record is there, although it's not a long track record, but it's a very fantastic track record for a company that just IPO. So we move on to the balance sheet. Also, I think when the company just started, of course, they needed borrowings, and partially of the shareholders' IPO funds was also used to bring down the borrowings. But as the company continues to grow, it is a company that is involved in payment. They handle a lot of money, and money is easy to earn also, because they are very good at what they do. Straight away, they just lower down their debts, and you see that they almost have net cash position. There is no dangerous or risky kind of liabilities or bank borrowings that they cannot or can't afford to pay back, because at hand now they have a lot of cash, and the business is still a cash generating kind of business lah. And last but not least, you look at the cash flow statement. So usually, as I said, if the balance sheet is very nice, income statement is also very nice, cash flow statement will definitely won't run very far. So every year, the cash flow from operating has been improving and improving and improving. Of course, come to 2020, the latest year, there will be some hiccup because of COVID-19. But as Chun Ming said, if there was no COVID-19, this company will continue to outperform, and this just caused a small hiccup in their so-called growth story lah. And you see that they are a company that is also not shy of reinvesting their profits. The owner know, and the founder know that being what they are today, what they are now, is not enough to actually sustain the company for 10 to 20 years, because eventually there will also be the same company or same kind of competitor coming in, trying to compete head to head. And probably that was what JuJuR thought. JuJuR thought they were the only terminal provider and the so-called service provider for electronic transaction, but they never knew that there was another company in the name of revenue, which could be more better in terms of the service and the EDC that they're providing. And this is why revenue, if you compare the growth of these two companies, revenue actually is outgrowing JuJuR's growth rate lah. So money earned, money reinvested, financing is just there to actually help to manage any cash flow kind of shortage and that the company faces in normal business day. So then you have to ask, because revenue is a growth company, is always judged and valued based on the future prospect and the catalyst or the potential of the company. So what is revenues offering as a growth story 1, 2, or 3, or even 5 years down the road? As we said just now, if you really understand the founder, they are actually building an ecosystem. So they are basically they started EDC, and then they have their payment transaction, and slowly you see them going into e-commerce. They bought e-commerce website called Buy More, which is the proxy for Tmall and Taobao, if not mistaken. And then they also bought into AnyPay. AnyPay is the company that allows them to give out services where people can top up their prepaid mobile number. So AnyPay actually enhances the solution services. And I think recently they bought a small stake in Wanna Talk AI. So basically, Wanna Talk AI is a AI chatbot. So still figuring out how Wanna Talk will actually complement everything, but we are sure that company owner is not sitting calmly and comfortably. He is really aggressive, trying to figure out what to improve and grow revenue Group Bhd. Chun Beng, anything you want to top up when you look at the kind of acquisition revenue is making?
Yeah, I think they are trying to, I think a lot of people trying to capitalize on their access to SME. SME is like the long tails is huge. If you cannot serve the big enterprise, SME is the way to go into, and then it's always a volume game. And then when you go into SME, there are so much thing you can do. Payment is just one of it. Of course, some of the people trying to sell software, and then from software they wanted to sell payment as well. And then from payment they'll try to sell microcredits. All these things is something that revenue can try to position themselves. But I think they try to go into some space that less people wanted to do. Probably from my perspective, I think it's more of a dirty job to a lot of people. That's why they go and do number crunchings, which is something that not so easy in terms of entry level compared to software. Let's say you provide a cloud accounting software, you provide a POS software. All these things is the entry point is much easier. If you have the right guy, have the right technology, then you can straight away go in. With price advantage, manage to raise a lot of fund, give a lot of free trial, then you can just support the whole markets. But then revenue, they try to go into this kind of area, which I think is harder for other people to go in. But of course, they didn't start from e-commerce. They go into physical payment. And then what they are so smart about is they know this physical payment will eventually go into cashless. And then for cashless means e-wallet player will be the one who is pushing the thing. So if they are the one have money to push the market, meaning they need someone to actually process it, and they are quite smart on it. And this is how they overtake eJuJuR, because JuJuR has been quite good in this area, especially the e-commerce side. Of course, you have the big player like iPay and whatnot, but eJuJuR has been quite successful, plant their footprint in governments. If you see a lot of billboard in PJ area and BPJ, they'll say make your payment via ePay. ePay is actually behind the JuJuR. So they do a lot of this kind of thing in e-commerce perspective. So revenue didn't try to hit on with them, but they try to go into the SME route, process the physical cash. Then after that, they go into e-commerce with some strategy. I guess the reason why they go into Wanna Talks, of course, when you check on Wanna Talks, the first thing you think, why this payment company go and buy AI chatbot? The AI chatbot help me to do collection, become alone. It cannot be, right? So when you go into something deeper, it seems like they are quite interested into something more related to facial recognitions. Meaning, this is what I guess, I might be wrong, is they are looking into facial payments in general, because it has been big in China. But of course, go into Malaysia, with still Asian country, privacy is not so much a concern compared to Western country. Maybe we can accept it. Also, it can be a good proposition for people like schools or whatnot, because the kid itself, you go ask them get a card or use the thumbprint, they might not know it, but the face itself can be just the card, the payment gateway where the parents can just put in the money and then they can just process the payment. I guess this is the reason behind why they partner with Wanna Talk, but I might be wrong. This is what I see, but I don't know whether Japan you have anything to top up.
Okay, I think when they started to talk about Wanna Talk, I also basically just Google out the company, and it's a chatbot company. At first, I really don't know, but when I make this slide, and then when I just make it, then I sit back and say, oh, okay. But I don't know whether Buy More has a chatbot integrated inside lah. But basically, I follow the so-called online kind of online shops, online websites which offer blog creators or website creators online cut kind of function. So if they have Buy More, they can integrate one of the top AI interface into the Buy More kind of a platform. And at the end of the day, how you secure sales, especially online, is that whenever your customer or potential customer has a question to ask you, there's someone to actually redirect them or give them the basic answer. And it must not be too robotic. Else people will say that, okay lah, I just straight away talk with the actual representative. Of course, you guys listening, you also know that a lot of companies, be it whatever companies, age or whatsoever, they also have online kind of bot chat kind of services. But usually we find it not so helpful because it's too robotic. And of course, if on the top is a better kind of a chatbot which can actually help customers solve problem or redirect them the right place, perhaps it could actually promote more conversions in kind of sales lah. But this one is just a guess. We have to see how revenue will integrate one talk to any other kind of platforms they have currently lah.
But of course, another thing to add about One Talk is it can be a synergy between revenue and them, because this One Talk is serving a lot of big enterprises.
Yep.
Which is something that revenue is not focusing on right now. Revenue is trying to go into SME route, become the go-to machine when you talk about payments collection, but they hasn't been successful going to big enterprise or even governments. If you compare the entire revenue figures that are coming in, so it can be one of the reason why they go into this thing to get connection to all these other big players. But we might be wrong, because I mean, from us as an outsider, it's a weird acquisition from the first glance. I got to admit, myself also got shocked why buy this chatbot things. So it can be a lot of reasons, but let's see. But of course, take this aside, it's always good that they do a lot of expansion plan. But what I'm trying to tell is they has been quick into payment related stuff, like the recent partnership with Shopee Pay is one of the example. They didn't forget where is the core, or even though they are trying to expand their footprint into other places. Then next is the
key. So we talk about the strength, prospect, the good side, rosy picture. Then you always have the downside. This is all about investing. So I think Cheng is asking, will you share your thoughts on GHL and revenue? Which are you more looking forward to? So here we are. We're talking about just a brief glance on GHL. So if we see GHL, actually GHL is a much bigger company than revenue, and it's also still growing. If you look at the numbers, bottom part is actually 218 numbers, and top part is actually 219. So it's 1 year growth. So from 2018, out of all the countries that it's serving, Malaysia, Philippines, Thailand, and also others. So GHL is in 4 major Southeast Asia countries. It's not solely dependent in Malaysia. Revenue currently is only focusing in Malaysia. Of course, they are saying that they will eventually expand, but it is a regulated kind of business. Talk about payment and kind of transaction. So they have to get the relevant license from each country, get audited, whatsoever, and then once they got approved, then of course other countries also have their competitors, also have existing companies. Else other countries, how they process their credit card and debit card kind of payment. So they have to also fight head on with companies in other countries in terms of payment transaction as well. But if you look GHL is not, when we see revenue growing, doesn't mean that GHL is losing out. GHL is actually still growing. Maybe there is already a big company in terms of growth rate. You don't see that kind of growth rate that revenue is having. But if you look at the numbers, Malaysia, they're growing from 190 plus billion up. It's already in million. So 192 million up to 220 million. So it's I would say 30 million plus, and then the baseline will be roughly close to 10% growth in Malaysia. Philippines is also growing from 30 million jump up to 21 million. And then of course Thailand, they registered lesser because they actually stopped the so-called prepaid card top up in the Thailand. That's why the contribution from Thailand is lesser. But if you just take that off, I believe that they are still quite aggressive in the Southeast Asia region. They already have their solid base in Malaysia, Philippines, and Thailand. And it would be very interesting to see, particularly in Malaysia, how GHL and revenue compete head-on to actually maybe share the market share, or eventually see who is the one that actually become the king in terms of payment and transaction within the Malaysian market. So that's something very interesting to look at.
But then, of course, I think GHL is having a much longer history, and then they already established some of the footprint into the SME markets. But they has been trying to do a lot of things, including one of the major things that they do is the payment gateway for e-commerce. So that's why they didn't put a lot of focus. Suddenly, revenue come out and try to grab the market share. But one thing to take note is the one that already tied to GHL with the machine, they are cost for them to switch to revenue. So GHL won't just suddenly drop because of whatever good stuff that's shared by revenues machines. It won't. And of course, eGHL will continue to improve. So the next thing that we should see is, I would say, the market share, it won't make a lot of difference. It's like someone higher than another one, maybe overtake. This is not the battleground anymore. It's kind of fixed already, because eventually going to price war, margin will drop, and then it's not lucrative anymore. So it's about the futures expansion plan they are going into. This is the one that can bring the growth value into it. But of course, if you compare year-on-year performance, this is why revenue PE usually is much higher than GHL in the past few months. It's purely because of the growth story. But then the future growth story or whatnot, it depends. A lot of things need to consider.
Yeah, definitely. So of course, I think both companies can coexist together, especially in the physical card payment kind of space. But I think what is more interesting is actually on the online. I think just now you mentioned online, there are a lot of online gateway players. iClick, iPay88. So these are all players. They are not listed, but if we have done online purchases before, these are companies that we have seen quite frequently, and a lot of local Malaysia companies, if they really do allow online transaction, they are already working quite closely with the existing online players. We won't talk about that because I think current online payment gateway companies have their strengths, and GHL and also revenue need to crack their head to actually look at how to actually fight the war online, or to bring this war online and get more market share. But we also want to talk about international wise. PayPal actually, even if you're in Malaysia or Singapore, PayPal actually is a proxy where they also process credit card, and some companies use PayPal. So if a company use PayPal, basically you also use the same. It's also the same thing. You register your credit card with PayPal, and then just that the payment method is via PayPal. And why PayPal actually existed was also the same story why revenue existed, because traditional card terminals were expensive. The same goes for Square. Square is also a company that all of these companies, revenue, PayPal and Square, they wanted to solve one inherent problem, was that when you want to make your company accept credit card, previously it was always via the bank. and it's a very expensive process. You need to buy the machine and you need to maintain the machine. It was a costly expenses, and a lot of small SME right today. If you still go to business with them, if you want to do business with them, you say I pay card can. Oh, can. You have to pay extra 6% because they are not hitting the minimum requirement when every time they swap the card and they ask you to borrow the expenses of any card transaction payment. So these are the kind of tech companies that come out and say that, okay, we can make things easier, we can make things simpler, we can eliminate this kind of expensive credit card terminal, we make it cheaper. PayPal, make it internet, make it online, and it has been very successful in the US. Square is also another example. Basically, you just buy a dongle, connect your phone, and then your phone can become a card reader already. So PayPal is already on the online space. Square, we don't know whether it will come to Asia or not. And if it comes, suddenly everyone with a mobile phone, even your barber or facial makeup hairdresser, if they have a handphone and then they can just put in the card reader dongle, they don't need to actually buy even a card reader as well, which is actually the expensive part of it, and they can receive payment through credit card. So these are the kind of tech which can be disruptive to tech companies like Revenue Bhd. In terms of Western companies in technologies, they are already one step ahead, and you want to invest in technology company, you always need to know what is the threat or what is the next kind of technology space coming that can disrupt the company lah. So yeah. Jumping, anything to add on?
Nothing much. I think probably you can go into all the comments for now. Before we share the valuation part.
Okay, let's answer the question first before we look at the valuation.
Yep.
So we'll go back to the first question. So why Revenue already have FFPay and still want to talk for its e-wallet segment? Good question. We can just guess right now. Buying a chatbot company actually means that the company owner or the founder have some plan to pivot the company. I mean, if you look at the news regarding Revenue, they haven't been sitting on their laurels. They haven't been just focusing on, okay, I do EDC and transaction, I'm happy. No. Even when it prompted, will you pay dividend because your company is doing so well? Got earn money got cash coming in why don't pay dividend? So the founder just said, I still want to grow the company, and to grow the company, I need to reinvest the earnings that the company business has been generating. If they pay dividend now, and then eventually they want to grow, they will still ask back money from the shareholder. So why do that when they can just hold on to the money, invest the money, and when the company becomes more stable in the future, then perhaps they would only opt to pay dividends. So as of now, it's still very unsure why they buy on top. But I would say I will see it from a good point of view lah. They want to add on to the current business model, and we really need to be more focused on the news to see how they are implementing it. Any updates on their airport project? No, I don't think so yet. I haven't seen any news on the airport project. So yeah. Next, any sharing on the ecosystem that Revenue plan to build? This is a very good question. If you look back at companies like Square just now that I mentioned, Square is actually a US company. They also start with the same thing. They sell you the dongle, you plug into your phone, then you can make your phone in the card reader. Your phone can read and transact credit card, debit card. So when the company started to do that, then eventually they know how the business is doing. Because every time this company process a payment for a company, for a merchant, say for example, Revenue help Pardini to process their business. Every time tap, they have the data already. So they can, they can borrow money to Pardini because they know how business is what is doing at Pardini side. If business is doing well, they are more willing and more happily to lend money to Pardini. So that was how Square actually pivoted their company. They started off as just payment service provider. Then they also went on to offering microloans. So if revenue Group Bhd is copying or looking for inspiration, they can also look at how companies like Square is doing in the US, and they can actually build ecosystems and extra services to tap on their current transaction processing and also card reading terminals.
But of course, I think one thing to add is they are smart. They ride into the wave that a lot of people already have Visa or MasterCard, and now a lot of people have e-wallets, and then they do the processing part of it. But one thing to take note is people start to have a lot of mobile phone, and then the mobile phone is actually capable of doing NFC scanning. NFC scanning enable you to do reading of the Visa card, for example. So you can tap to your phone, or in another word is you can convert your mobile phone into a terminal straight away. Traditionally, there are a lot of bank or whoever trying to sell this as a mobile terminal. Then you need to plug something into audio jack or whatnot, or into the USB cable, so that you can turn this into cable. But now most of the phone that you have, mid to high range, already have NFC and is capable enough to turn the phone into the mobile terminals. This is the biggest threat to revenue in my perspective, not JSL. This thing come out, JSL also cannot tahan, in my opinion. But I'm glad that they are trying to do something, because now I'm processing the thing for you. I know your data, which is something that they cannot do at the moment. That's why they write on Wanna Talks. I wouldn't say as a gambler, it should be a strategic move, because they are more into the technologies. They can process the data and then try to capitalize on the pool of data they have at the moment. And then be it automation, be it find some business opportunity, this is the right way. Compared to wait the big boy like Visa and Master use the new tech to KO all these parasite people who, it's always good at you are on the upstream. Visa Master can always tap out at anyone, but
Yep.
for smaller player, you just need to be fast enough to capture the market share and then turn whatever opportunity they have right now into something that no one can beat you. So I guess revenue is having to do something like this, and they realize it quite early based on their recent move. If they happily do this thing, then I will be worried, and I might not be interested to look into this company anymore, because the NFC phone is so cheap. 1,000-2,000 you can get a phone is a terminals already. Why you need a white machine, even though it's good?
Yep. Yeah, I think you can also look at how WeChat in China also from a chat software slowly become a mode of payment. Also, people are sending money using WeChat, and WeChat also plays a big role in the China commercial space. They scan their QR code and then they can just send money to the merchant already. So these are the so-called tech or threats that can impact companies like Revenue or JHL, which still offer a physical terminal card reader. So I hope we answer your question on JHL versus Revenue. I think if you want to look at how hard the management is working, definitely Revenue management is working harder. They are putting more effort. They are always looking for ways to transform their business. And that one, you have to give them credit for what they are doing. Undoubtedly. So, yeah. So, Jermaine, can we send Cheng our slides?
I think can, like what we used to do is typically if you PM us, we will try to send you the slide. But we also wanted to do some promotion during this live session. Is we are trying very hard to build our YouTube channels because we realize also content based, if it's not interactive like videos, words can be just boring, and then we try to go into that space. But of course, we are new into this space. We need all the support from you. If you guys like our sharings, You can go into the pin comment. I have shared the channels link there. Just subscribe to the channels. We will work very hard to update the videos moving forwards lah. So, but for Chen or anyone who interested to get the slide, just PM us and then we also send you.
Definitely. And of course, I think we do these slides already after we do this kind of live also. I mean, the live stays online, be it Facebook or YouTube. You guys want to rewatch it. And then after you rewatch, you have any question, you can also ask us a question in the comment section, and then we will try our very best to answer you. Because at the end of the day, I think this is what we want to offer to retail investors in Malaysia and Singapore. And we are doing our very part to actually make that a good thing lah. So is revenue part of 5G? I would say no, but I think revenue is more towards a tech company, in my opinion. A very good software and tech company. So why revenue share price do not spike like other tech stock, even though they have collaboration with new business? Chun-Ming, do you want to share the valuation chart first? Valuation slide, and then we can straight away answer Alvin's question. So if you look at today, after market close, the PE ratio for revenue is at 60 times. So I think the PE is a very steep valuation. Of course, yes, it didn't really go as crazy as other tech stock because there are two things. First, I think the business is quite predictable. People are already anticipating the growth of revenue within Malaysia. The numbers speak for themselves, be it physical terminal sales and also rental, they are growing. But eventually, they are still growing within Malaysia only. They are not doing business like JuJuR in Indonesia, not yet. They are not doing it yet lah. Indonesia, Vietnam, Thailand or whatsoever, not like JuJuR. So for a company who is just earning money just within Malaysia, 60 times PE is a bit on the high side lah. Just to put things into perspective, I think Nestle Malaysia is also roughly this kind of valuation, right? Earning 2 ringgit, and then 2 ringgit of share, and then their share price is around 160, so it's around 80 times PE, so 60 to 80. You're looking at that kind of valuation, and Nestle is already a proven stock that has been listed in Malaysia for 30 years. Revenue is still 2 years, and as we said just now, there are still risks to the company if other technology come and disrupt their current business model. So it's steep, but it can still grow. So I think you won't be seeing the crazy share price spike for companies like Revenue unless they really can grow outside of Malaysia. Then you will see the crazy valuation come. 100 times PE, 120 times PE, like your glove company, because they are selling gloves all around the world.
Yep.
So I hope in terms of valuation, we justify why revenue is more stable. Then the next question.
Sorry.
Do you foresee that Uber Grab takeover event happening? I think Uber already gave up Southeast Asian market to Grab, and most likely it won't happen because both companies actually have the same owner, which is SoftBank, the Japanese venture capital company. So back then, if you understand the story, Uber and Grab were fighting very hard in Southeast Asia to get market share. So SoftBank said, okay, Uber, you just pass your business to Grab within Asia, and then you concentrate in US and in Europe. So it won't happen. Uber won't come back in Southeast Asia lah. Next question. Revenue have a project with Bank Negara about tokenization. I think I briefly read about it, but I think there is no tangible plan yet. So there are a lot of news on revenue. Just now you also said they also have project with Airport. I think the management is really putting effort. What space they can go in, they will really go in. So it's still quite superficial right now to see how this tokenization thing project with Bank Negara can improve their margins or their growth lah. But it's also an interesting to look at lah.
But I believe when we talk about Bank Negara, all those things, it won't be an award to a single player lah. It will be a mixture of multiple players to prevent proprietary data issue or whatnot. Imagine if you are BNM, if you don't talk about local player, or if you include local player, then you will need one tech player from the Western country, one tech player from China, for example, to let them compete with each other so that you have the best solution of all, and then they can control each other. So don't put too much hope into this to boost a lot of things, because it will be mixture of different player take the piece. If they only open to local player, I believe EJHL or whoever will be part of the bid as well. It won't be a single player bid, in my opinion.
Now okay, so now we know. Thank you for being very supportive to us, and thank you for your comments also. I think through your comments and our comments, we actually learn more and share more information. So Wong Xiong Ting is asking, what's the difference between WeChat Pay and revenue business model in terms of payment method? So revenue business model is the typical business model that payment kind of methods that we are using today. Basically, they have a terminal. Then if we want to buy something, we scan our credit card, and then once we scan it, then it will collect information, encrypt the data, and then go through the so-called entire system to the merchant bank, to MasterCard, Visa card system, and then only they charge the amount to your credit card bank. WeChat Pay is more towards QR code, and WeChat has its own wallet. So you just load in your money into your WeChat wallet. It's just like your e-wallet lah, but basically what we have now is separate. Touch and Go wallet is an app on its own. WhatsApp is an app on its own. We have a lot of apps. WeChat is the only app China needs. And then within WeChat, you can access to investments, you can access to investments, you can access to payment as well. So it's a super app, and they don't need physical card terminal. Once you scan the QR code, straight away they will direct you to pay to the company's account number already.
Yeah, I think in a more layman term, you can see it is one is B2B focus, serving the businesses, and another one is B2C for WeChat is more B2C. But of course, WeChat is big lah. I mean, behind the scenes, Tencent. If you talk about WeChat Pay alone, all those things, they are more into B2C. So B2B and B2C is quite different. B2B is about acquiring a lot of SME, providing a lot of services. Margin-wise, usually lower because you're serving the business segment, but it's a different story for revenue, which make them unique. B2C is usually higher margin, but then it's too, how to say, it's not concentrated. Acquisition is also hard, and then usually you can't make money with the single offerings. And then what you need to do is you build an ecosystem so that, for example, Grab, they create, they started off with the e-hailing, and then they go into Grab Pay because e-hailing can support Grab Pay, and then Grab Pay also can use it to order foods. So they're building ecosystem so that the thing can flow within themselves. So B2C usually is about building ecosystem, but B2B is providing a lot of services that SME cannot get rid, or the dirty job that the SME don't want to do, or is it's just that they are cheap enough to provide so many things that you are lazy, just let them run for you. So this is the fundamental difference, in my opinion.
Yep. Any idea how revenue can reduce the OPEX on terminal and SIM card? I think one of the easiest way for them to lower OPEX is to enlarge their market share. So I think they sell terminals, but they also do maintenance, and servicing is also part of their revenue in terms of how they grow. So say, for example, if the market share of the EDC terminal sales is small, then they hire a technician, or in terms of spare parts, when they order, they want to repair the machine, then of course the cost would definitely be higher. But if they slowly sell more terminal or they rent more terminal, then their base of client will become bigger and bigger and bigger. Then suddenly, the existing technician that they hire can service more client, and when they order repair parts, spare parts, also it will definitely help in terms of lowering their OPEX. But this kind of business model in terms of the physical kind of terminal, it will definitely hit a ceiling, because at the end of the day, technicians still need to eat. You cannot lower the technician salary. Parts is still cost money. You can just give a bigger order and leverage on the MOQ, but there will always be a cost there. If they can only shift it down to a maximum level, and then it will stay flat. Just like how big companies like Nestle or whatsoever, every year they will definitely incur material costs when they buy raw material, because that's the max they cut down already. They cannot go lower already. So 可以说中文吗？
I think if they are interested in this particular Mandarin speaking kind of session, maybe we can do a poll or some interest group. Then we can do a session for them. We also always open for suggestion. Thanks for sharing this, Rex.
So 如果你需要我们讲中文的话，就在留言那边点赞吧。Maybe we will look at the possibility Thursday night is in English and the other days will be in Mandarin. Same topic, but different language. Because at the end of the day, why we chose English, because we wanted to educate the whole Malaysia and the whole Singapore, and eventually anyone else who is watching. And English is the official language around the world 啦。So, but 如果你需要华语的话，我们可以选一天是用华语来做 live. I think the founder mentioned in an interview he want to talk to create a chat box in the wallet. Yeah, I think that's a very good preamp on how the founder wants to look into integrating chatbot into the e-wallet. So it will make the e-wallet more human-like, and it will direct users like you and me to actually go where we want to go, and then it will actually make us more reliant on our e-wallet, and that is how ecosystem actually grows on us lah. That is how we actually cannot stop browsing our Facebook. We cannot stop not watching YouTube. We cannot stop not logging into Instagram, because it has become a part of our ecosystem lah. So yeah, thanks a lot for the sharing, Kimberly. GHL buying revenue or the other way in the future? If I were revenue's boss, I wouldn't sell revenue to GHL lah. But this kind of thing you never know. But I think very hard, very impossible lah. But doesn't mean it won't happen. But it would be not smart to sell revenue this kind of company or actually buy GHL also, because GHL is mainly owned by private investment firm. So I think it's very hard to actually for them to buy revenue, or maybe the other way around also. It will be very expensive. So I'm aware of this info. I'm curious of what chatbot can add more plus. Guess we will know this. Yeah, definitely. We will know more once the founder actually gives us more insight, or when it gets integrated into the app. It would definitely be a plus point to see how everything will improve the overall revenue kind of ecosystem and interface lah. It's a good thing that they actually buy a chatbot company. We want to see how different they want to be different. Transaction in Lazada and Shopee will contribute in revenue business. Jumping, are you sure about this one? I think if they were to
I think there are two parts lah. For Lazada, if you go through the international transaction to Taobao or whatnot, they will go through RevPay. Cross-border, they will go through RevPay. Only this part. For Shopee, I don't think so, unless you go to the physical store and you wanted to pay with Shopee Pay, and so happened that the store have the white machine and process it for you, then they will get a cut. But then the majority of it is not contributed to revenues or business.
Yep. So yeah, if you were to buy from Taobao, go through Alipay, out of Malaysia kind of remittance, yes, revenue does take a pay because they do that kind of services. But for Shopee, as Jun said just now, just put just put in Chinese subtitles. This is like, bro. I hope that somewhere down the road we are capable enough. We can find a software that can load in subtitles in Mandarin live.
And we are speaking English, meaning translate in real time.
Yeah. So of course, if you really like us to have a session in Mandarin, let us know. I mean, both of us, we can talk Mandarin, just that we chose to speak in English because we wanted this to be a Malaysian thing and not just for the Chinese lah. Sure thing, they earn a percentage of revenue by each transaction they gain, and they gain customer data as well. Data is money nowadays. Yeah. How the payment services company eventually pivot is they get data. Like I mentioned just now, Square Inc. just started off as a payment company, and then slowly they get to know how the merchant is doing. Then they can offer microloan because they will know that, okay, if the business is good, loan payment, they'll pay more because they charge by a fraction percentage law. Let's say you do this month, you get a revenue of 30,000. So I will always charge your loan repayment to be 5%. So of 30,000 revenue, they will take 5% to repay, to ask you to repay the loan that you have gotten from them. So if business is not good, let's say you just earn 10,000, then they will still charge you 5%, but in terms of the number, it's lesser law. So they can manage micro loans also is a possible thing. And this is how data will actually transform a company like Revenue. It is a tech company. It is not just a payment solution company.
Yeah, I think one thing to share, I think if you are on early days, people fight for land because land equal to resources. After that, people fight for petroleum. Even you got country go into war because they wanted to get access to the petroleum. And now it's a time to go into silent war, trade war or whatnot, to go into technology which is data related. The war won't stop. There will be competition among all the country. It's just the battleground will just shift. So as a layman like us, we cannot change or adjust how this will move. You just can go into the same wave. So look into the company that can gain a lot of data, and then they are able to change the data into some money, then put the money in there. You will grow together with them. But of course, data now everyone also have is who managed to turn it into monies or into a profit.
Yep. Can you tell about the revenue business in the airport? I think as of now, there isn't quite much information about how Revenue is looking to earn their next kind of service in the airport. Let me do a quick check. I think it was just basically their news only. No, I don't think there's a so-called solid black and white plan on how Revenue plans to offer services or solutions in the airport. But that will be another thing to be quite exciting to look at. But of course, near term, we know that international flights is still pretty much grounded. I think even if they have the project, they will have to postpone it until flights and tourism is showing a better prospect lah. So yeah, thanks for Kok Chung to highlight. I think they have a JV in Cambodia just not long ago. But I think in terms of contribution to the company is still very minimal. So if you look at how they break down their salary pool, the revenue part of the business, a lot of it is still in Malaysia. I think negligible amount is coming from Cambodia, but it is good to actually see them growing out of Malaysia. Transaction payment is actually very, very highly competitive. To have to fight with JHL within Malaysia is already a challenge, and whatnot. They come to countries like Singapore, or go to countries like Cambodia and whatsoever. But I think the prospect is more exciting for third world countries or Southeast Asian countries that are still adopting to e-payment or e-wallet kind of trend. For countries like Singapore, I think Thailand, we are considered countries which are already they are already players like Touch and Go. In Singapore, you have NetsPay, you have EasyLink. So these are already big players, and if you want to come to countries which already have a strong tap or strong company doing transaction payment, it will be very tough. But for countries which are more like behind, like Cambodia, Vietnam, definitely there are more opportunities lah. So looks like there are a lot of questions and interest in a company like Revenue Bhd. It is a good company, it is a great company, and but valuation is a bit steep. But if you have a long investment horizon, 10 to 20 years, you can slowly do your due diligence and then buy if there is a correction lah. It's still under the radar and involve NDA. Yeah, thanks for answering, Kimberly. This info is a surprise from my question during the last quarter analyst meeting. Thanks a lot for sharing. I think I also just briefly saw this kind of news from other Facebook live and also sharing also. So it will be very interesting to find out how this company actually wants to enter this business segment.
Okay.
So yeah, I hope you enjoy today's company. It's a software company, it is a tech company. It is not just your normal payment solutions company. As always, we are always happy to share good companies, good tech companies recently within Malaysia. Of course, there are also a lot of other companies. Let us know which company you want us to share on next week, same time, Thursday, 9 p.m. You can watch us through Facebook Live or even on YouTube. Say hi to us, subscribe to us, and we will definitely be thankful of your support and your time. So we see you next week. Thank you very much. Bye-bye.
Bye-bye.